Hello guys. Good evening, good evening, good evening. In today's video, we're gonna talk about um one or two things based on the forex trading and some of the basic things that you guys have to know in terms of you trading. There are some of the terminologies that you guys have to know, so that at the end of the day when you guys come across of this particular terms, you won't be able to be worrying yourself that what exactly it means. So in today's video, we're gonna talk about the basic thing, some of the keywords that most of the big guys out there normally use when they are teaching or even when they are trading. Someone can tell you, put a stop loss here, do this, but if never heard of this, you won't be able to know what exactly it is. There are a lot of terminologies that I'll be looking at, and I always tell my students, you guys should stick and go through the videos and whatever that will be teaching you guys will have to go through it all. So at the end of the day, you guys will come up with um a happy mood. Understand? If a teacher taught you something and you're not able to go through, at the end of the day, you'll be able to master whatever that he's teaching you. For you to become perfect, you have to practice whatever that you have been taught. So always practice make man perfect. And also, I'm a type that I've never been to mentorship program before, and also with this, I've enacted upon myself that I have to make practical research, read a lot of book. I normally buy books online, Amazon, and a lot of things. So with this, it's also helped me, or this has gladly helped me to become who I am now. And forex trading is in a way that if you cannot sit on your buttocks, you cannot do what we call forex. So always you guys who are to read the books that we are recommending, or we'll be recommending to you guys to buy or read. And also the library that they are talking about, you guys who are to stick to it, because it's something that you're not going to get it anywhere. Yeah, because when you check Amazon and some of the website that we buy books, some of the books cost $50, $100, $45 and above. But this one we are just giving it to you guys, that's for free. So please, you guys to make good use of it, so that at the end of the day we will be happy as a family. So with my that I said, let's jump into the video and let's jump to the note side and check whatever that we'll be doing. Thank you. Okay, as I've said, and um this is my template, the place where I normally write my notes. So in today's video, we are going to look about what we call forex trading. To start from the basic, forex is the short form of foreign exchange. So what is foreign exchange? Many of you have participated in foreign exchange unknowingly. Here comes the big question. Majority of us have been asking ourselves, what is forex? What is forex? So in most cases, before I define or give you the explanation of forex, forex trading itself is done in the development countries, and also it is done in the stock exchange markets. For you to be able to participate, meaning your currency, you have to be accepted as an internationally. So if you are not even accepted to practice this particular thing, your currency, or as that particular country's currency, will never be uh, used there in terms of the transaction issue. So now let's vibe into the meaning of forex. So someone asks you, what is forex? So simply, it is the buying of currency and selling another currency at the same time. So when you buy a currency and sell it for another currency, you are just transacting what we call forex trading. Okay, for example, if you have bought components from CK company, or you have traveled outside your country before, you have participated in what we call forex trading. So the moment you exchange your currency with another currency, that is what we call forex trading. So forex trading is something that, as I've said, we normally do, but just that we don't know what exactly we are doing. So because you give out your country's currency, you have exchanged your own currency with another foreign country. So forex is just a short form of foreign exchange. So in the professional, so I'm here now. I'm reading from here down. Okay. So in the professional finance world, some people call forex trading uh, currency exchange market or FX. What exactly FX simply like? When someone say FX, is just the short form of forex market or the forest. So some people call it FX market or forex market. Originally, in forex, it is simply trading one currency for another, as we stated in the definition. Let's say Reliance company want to buy. So please, I'm here. I'm at the top here, coming down. I'm reading from the top to the down. So let's say Reliance company want to buy 1 ton of cellulose from another company. The Reliance company will give another company, let's say 100,000 Ghana cedis to buy cellulose from them. And this particular transaction that have occurred here is what we call forex trading. Yeah, it's just a simple form, like barter trade. You have to exchange good for good. You cannot go in that you want to exchange something without you not giving something out. Okay, so now let me explain this way. Let's say, for example, Reliance Company in Ghana, which is owned by Madam Ruth, want to buy raw materials from Madam Elizabeth Chemicals in Ghana. Okay, now let's say Reliance Company use the cellulose either to produce gum cement as a complete product, and Medina people also want to buy gum cement for tilling their office. So you can see I'm here. So you can see I'm here coming down. So you can see that my they will give the Medina people will give the Reliance company approximately 200,000 Ghana cedis in order to get what they want. So in that transaction about foreign exchange has occurred. That is why foreign exchange is all about. Sorry. So in that transaction about foreign exchange has occurred. That's what foreign exchange is all about. Okay. So that's how foreign exchange is all about. It's simply exchange of currencies. That's what people normally say. It's the exchange of currencies. When you buy one currency and sell it for another currency, that's a transaction what we call forex exchange. That is why some people call it currency exchange. Now that is the offline aspect of forex markets because that transaction is conducted physically. Okay, let me explain to further. The buying and the selling that just occurred between Medina people and Reliance company, which is owned by Madam Ruth. The exchange of money in terms of achieving something, which is the goods, is what we call forex exchange. And this one is the physical aspect. But forex market itself or the forex trading is the online aspect that we will be looking at. So let's continue here. The online aspect is the one we want to learn. It's still the same thing, just that the process of doing the trading is different. Yeah. The online aspect is the forex we are all learning. And this one happens between banks such as the central banks of countries, hedge fund, and let me say local banks as well. Okay. So for example, um, when you transact a business or when you buy something from a company, whenever you give money out to these particular companies, you are just transacting what we call forex marketing or the forex market. Okay, so I'm continuing with the reading. Forex is one of the largest markets in the world with a total day liquidity of 3.6 trillion. Some people will say 5.6 or 5.1 trillion. They are all the same. It's larger than New York Stock Exchange market and even cryptocurrency, even if it is buying together. So what it simply means is that even if they combine crypto uh, markets and the New York Stock Exchange market together, it will never reach the heights in which Forex market is. So you can see how uh, big it is. Though some institutions say the average trading volume of New York Stock Exchange can go up to $169 billion sometimes, but that's still downfed by forest markets or forest trading. Of course, some of you here can even, those that make research will say, but the assets of New York Stock Exchange is 31 point 30.1 trillion dollars. Yes, that's true, but read it well. Asset of a company is different from the daily trading volume. When we talk about a volume simply means when we talk about volume in forex market, whenever an asset change in a period of time is the volume. So if Kofi happens to buy 10 goose, let me say Kofi bought a house which cost uh, 500,000 Ghana cedis. So uh, either the previous time the market or the price of houses wasn't that much high. So that increment that just happened at that particular time is what we call volume. You talk about volume in terms of using the charts. Okay. So in the forest, please, I'm here. So please, I'm reading from that place to the down. So we are talking about the volatility here. Forex market is a kind of asset, is a type of uh, market that you can be in a room and make money. You can be asleep and make money. So if let's assume you place your $500, so if you place your $500, can you say that the market for that day does not even know you, even if you trade with $10 million? You cannot move the market by even an inch. So no matter how huge amount of money that you make a day as a profit, you can never move uh, the standard or the percentage of forex markets. And that's what uh, make forex so increative. And why me and you cannot make this particular money? If a lot of guys out there are making this money, why is it that we cannot make it? Why is it that we cannot cut our own share from the global cake? Remember, I told you that we are learning the online aspects or the online side of forex market. Let's take ourselves to the local markets. Whenever you buy tomatoes from someone, yeah, when you buy and you give that money to that particular seller, that's what we call the forex market that you are doing marketing. But that aspect is just a physical aspect. So for the forex market itself is the online aspect that we are doing. So it's the offline aspect that we are doing. So the offline is just the normal life trade between entities of two different countries. So we are on the online side of it. Yeah. So when you buy a good from one entity in a sense of paying, doing just buying and selling and yeah, exchange whenever you buy something from someone and give money to that person, that's the forest that you are doing. But that one is the offline side. We are doing the what? The online aspects. So let's try to know some of the things about forex. Now, one, forex is one of the largest financial markets in the world, which comprises of some people say 5.6, 6.6, 5.1 trillion. No matter that it is, it's still the same. Forex trading involves money. No central bank or no central marketplace, that's the OTC. Price is set by interbank market. Interbank market simply means is the place where uh, is a place where various let me see, yeah, is the place where bankers go to exchange their currencies, or is a place where trading take place between traders and liquidity providers. So in forex trading, there is no place where traders trade. They trade. There is no place that traders go to trade, but everything is done online. So there is no firm that you can go there and trade without. Let's assume the firm is a particular academy whereby they teach. At the end of the day, they will fund your account for you and trade for them. That one is different thing. But the one that I'm talking about is like forex is not an institution being established that you can go and trade. Everything is done online. Now note, product is quoted by bank, but not all are of the same prices. So this particular point, uh, this particular point, this is where the brokers came in. So every broker with how he or she, or every broker have a way of what supporting their what their that's supporting their what um, their clients. So fluctuation is based on which currency is stronger at that moment. So this fluctuation also came into existence whereby the let's say the base currency is stronger than the quote currency, or vice versa. So this fluctuation also comes to worry the marketers or the traders in a way when the economic calendar being released have more impact on one of the currency that you are trading. So now let's check about the example of trading centers that we have. We have UK, you have US, you have the Japan and Singapore. So these are the centers that we have: UK, US, Japan, and Singapore. So these are some of the things you should know. And also let's check about the what things you should know before starting this forex trading. Now you should know that forex trading is not a family property whereby someone can just go and pause them. Don't do this, don't do that. No. One, forex trading is 24 hours market, which means that it's open from morning to morning, 6 to 6 is there. You only have to focus on the few popular pairs, that is the currencies. We all stated about this. We have the major currency pairs and the minor, and there are a lot. But you have to focus on the few so that at the end of the day, you'll be perfect with the movement that goes on there. Okay. So let me take you guys into. Okay, let's continue. So in forex market, there is nothing like commission. But we have brokers that take commission from the profit you make, and some are the market makers. We will talk about that. So point 4, low starting capital due to leverage. Simply, you can start with a little, like $1, depend on the broker that you are using as well. But your broker also gives you a loan that we call leverage. We will talk more about the leverage for you guys to understand what exactly it means. So no room for insider trading effect. So if you trade, whether you gain a lot, whatever that it is, you cannot come and blame me. It's an online thing. You make money regardless of economic condition. I've spoken about this. For you to make money depends on the news release. All the news that they release have more, some have stronger impact on the currencies that you are trading with. This is either going to be in your favor or not. So let's check about the downside of forex trading. People use it for gambling or gamble, whatever that it is. A lot of guys out there are using it to scam beginners because they don't know anything about the forest. And it's true. Sometimes in a group, when you chat someone, then that person will give you a pop-up message. Account management is available. You deposit $500, you get 5,000 a day. It's a lie. Then they said profit share is 50-50. So these are the things that uh, some guys out there are doing to get uh, to scam some of the beginners. And also we have some of the guys that are in the forest. They've learned what is called a forex, but they don't have money to fund their account. So what they do is that they will come out and start chatting you guys privately, deceiving account management, another thing, pay mentorship, another thing. When you join them, they use that money to fund their account and trade for themselves. At the end of the day, you chat them, they will not even mind you. So uh, let's check, let's be vigilant with this particular point and know how we'll deal with those that chat us privately. So point two, 90% of traders loses money. Yes, because of what we call emotion. A lot of people loses money because they cannot control their emotion. Sometimes you might place order. Sometimes you might place order that buy. But because of the economic condition or the news release based on the currency that you are trading, it has affected it in a way that it has moved to the opposite direction or the prediction or the opposite prediction rather. So with this, they'll be like, oh, I'm losing money, I'm losing money, I'm losing money. Oh, let me leave this trade, otherwise I'll blow my account. Immediately, sometimes immediately you leave there, you close that trade, then you see that the market started moving your way. Then you say, ah, shit. Oh, I shouldn't have. But should I know it's over the last that you guys all know? Yeah. So stressful for those who don't know how to handle it. Yes. If you can't handle or if you can't control your emotion, it becomes stress to you. Let's know those that involve themselves in forex trading. Now, brokers. Brokers are the people who offer the leverage, and they are the people through which we also have access to the forex market. Yeah. So now let's check about the point two, retailers. Retail traders is you and I. Retail traders is you and I. Okay. Multinational corporation companies, commercial banks, money charge, money charge, money changers, sorry, pension fund, government, and central bank. So those that who follow us well and know what is called fundamental trading, they will see this particular news that will be released by these particular firms and other things. Sometimes your brokers will give you news, this and that, and they will give you notification that this and that is going on. There are lots, there are lots, there are lots. So let's check about some of the terminologies or common terms you need to know. As a trader, sometimes you might come across of some of the keywords that is in the forex arena. But if someone said liquidity, bull market, Charlie, the market is a bull market today. So buy or do this. Because you've never heard of what is called bull or bear, you won't be able to know how to place the order. But here I'm in today to express it into pieces for you guys to understand and know what exactly that it means. So let's start from liquidity. Liquidity simply means the amount of interest in the market. Simple. The amount of interest in the market. And also, bull market simply means upward trending of the market. That's going to be the long buy. So when someone say today the market is a bullish or a bull market, simply means the market is moving in upward direction. Upward direction, which is the top, is moving upward direction. Now, someone will say it's a bear market today. Hey, Charlie, my friend, today the markets, the GBP, USD, everything was a bearish market. Simply means a downward trending. That's the selling. Is what? It's a downward trending of the market. Short. So if someone says that today the market is a bullish, is trending up, is a bearish, is trending down. So when we talk, what are we talking about? Is when someone say a bull market, a bull or bullish is a buy, or bearish market is a sell. So we will talk about that more. So what do you mean about PEEP? PEEP simply means um, it simply is the smallest unit of measurement of currency pair. The smallest unit of a measurement of a currency pair. Now let's check about what exactly it is. So the PIP itself stands for percentage in points. The PIP stands for percentage in points. In our previous reading, we were talking about leverage. Leverage simply means the ability of using a small sum of capital to control larger or a large sum of money. We talk about that more into detail. Or even if you use, let's assume, let's assume you started a business with 100 cities. By the end of the day, at the end of the year, you're able to use or manage your business in a way that you came out with what, 1,000 Ghana cedis. That's the leverage. We're able to use the small capital that you invested. That's the opening capital to be able to what, to generate a profit, uh, which is what, 900 cedis. So let's talk about margin. Margin simply means the amount of money available in your account or used to open a market. So the amount of money that you have in your trading account is the margin. Now, a lot of people will be like, what is ask price and pay price spread another thing? Today we will learn it. Now, if someone said ask price, it simply means the price in which you buy the base currency. The price in which you buy the base currency is what we call the ask price. Now let's check about what we mean bid price. Bid price simply means the price in which you sell the base currency. Now we'll be doing the practical aspect in what we call the MT5 or the MT4 interface or the app itself. We'll be doing more. So as we were saying, let's check about some of the common things in the forex market. My screen just full up, so I don't know. Okay, we have something we call as liquidity. Liquidity is the amount of money that so liquidity simply means the amount of interest in the market. When someone say a bull market simply means upward trending of the market long. And when someone say a bear market, simply means the downward trending of the market short. Pip simply means smallest unit of measurements of a currency pair. I'm sorry, I don't know if I've read this particular side, but my screen was falling or those, so any mistake that comes of rereading here, please just accept it that way for me. Okay, what we talk about PIP also, PIP simply means the smallest units of measurements of currency pair. So the PIP simply means percentage in points. Now we used to talk about leverage. Leverage simply means the ability of using a smaller sum of capital to control large sum of money. So if you start a business that I've said with 100 cities and at the end of the year you're able to use that 100 cities as the opening capital to generate 1,000 cities, that is what we call leverage. You've used the opening capital which is the smallest, that's 100 cities, to generate a profit of what, 900 cities. That is called leverage. So when we talk about margin, margin simply means the amount of money available in your account or used to open a trade. So the amount of money that you have in your trading account is also what we call margin. And we normally hear this ask price, pay price, another thing. Simple. Ask price, without ask price or yeah, is the price in which you buy the base currency, and the bid price is the price in which you sell the base currency. So what do we mean by spread? Spread, it is the differences between the bib and the ask price. So we will do more calculations or more example in the MT5 interface when we come to our second lesson on the beginners to pro lectures. So we have something we call correlation. Correlation simply means the extent to which one currency move in the same opposite direction to another currency. Yes. So this particular movement that move in the opposite direction happen when the news release is affecting one currency. So with this, the market is not going to move in a proper direction. Okay. So let's continue with what? Base currency. Base currency simply means it is the currency at the left side, and the quote currency is the currency at the right side. So let's do example. Let me pick my pen. So if you have a currency like this, 6 1 and 6 2, this one is our base currency, this one is our quote currency, because the base currency is the currency at the what, at the left side, and the base currency is the currency at the left side, and the base currency is the currency at the right side. Okay, so now let's move on. What are all you need to know? So what are things that you need to know? Or sorry, what are all you need to trade? Or what are the things that you need to have before you start trading? First, so as a trader, you have to have a strong internet connection. You have to have your laptop. You have to have your trading plans that we have been talking about. Trading plans. You have to have a trading plan. As a trader, you have your trading plans and follow it every day. No matter how profit you are making from the market, always follow your trading. Always follow your what? Your trading plans. You can never make profit without what? Uh, you not sorry, you will make profit if you're able to follow your trading plans. But if not, if you skip all the plans that you set up, if you say you want to make $10 a day, immediately you make that $10, leave the market and sleep. Now, what do we mean by a broker? The broker, the broker is you and I, and what? Sorry, if you say trader, a trader is you and I, and brokers are the forex markets. So let's check some of the two things, then we leave the market or we leave the studies. Yeah. So without the brokers, you can't trade on the forex market. Now we said they offer us leverage. Let me explain further what exactly leverage is. Leverage comes from the word lever, if you remember physics or basic science. And the definition of lever is what? Is a device by which you can do more work with a little effort applied. So the little effort is your own little money. The device is leverage, which the brokers give you. And the more work is your money in the forex market. In the forex market, leverage allows you to use a smaller money to control big money, as we stated in the definition. Remember, in forex, if you don't have up to $25, you cannot trade. Yeah, you cannot trade. So what the brokers does is that they lend you, or they lend us more money, which is the form of us. So this particular money is the what? The leverage we are talking about. So that you can be able to what? To meet up with the demand of the market. So in simple terms, leverage means the brokers are helping you, that they are helping you to take more money in their own account and place it on your behalf into the forex market itself. So if you can check with the XNS broker, even if you have 0.75, you can place a trade, because your brokers are offering you what you call spread. They will give you more money to use the little money there to make money as well. Now, for all this good work that the brokers are doing for you, are they doing it for free? Certainly no. So where are they making back the huge amount of money from? They are giving you simply, uh, they are making it from what you call spread of every trade you make. I will explain spread later, or you can still go back and check what exactly spread is, but because of time, let's continue. But in simple terms, Spread is like the fee that the broker charge on every trade that you make. Now, a single client can make up to 10 to 20 trades in a day. Now, a single broker may have 500,000 active clients, which is the traders, under it. Multiply 20 or 10 trade by the 500. Uh, yeah, by that 500 uh, traders or yeah clients. That means they are charging money on like what 10 million per trade. Even if it is $1, they are charging per trade. That's $10 million, but they make far more than what I'm saying. I'm just what giving a scenario. So what are the rules of the traders or the brokers? Sorry, the rules of the brokers. Let's check out and see. They are the ones that